Welcome to Coffee Break Investing with me, Chris. I hope you guys are doing well and have been enjoying the market rally and then subsequent falling off recently in the last week. It's definitely been a market that I've found quite difficult to navigate in terms of you don't know whether you should be a buyer or a seller half the time. I tend to always try to be a buyer and hold on to my stock long term, and that's certainly what I've been doing now. But I've sort of invested everything I wanted to invest for June now. So I basically invest a certain amount each month. And so I just want to tell you really about the gaming stocks that I've been buying and some of the gaming stocks that I own. So I'm just going to start. I'm not going to go into detail on all of them, and I'm just going to give a few honorable mentions at the beginning. Even though some of these honorable mentions, I would say, are even more fundamental to my portfolio than some of the other ones I'll profile later. But the gaming stocks that I own are, the honorable mentions at least, are Microsoft, Tencent, Sony Entertainment. So yeah, I just wanted to mention those at the beginning. I think they are all sound investments, and I would encourage anyone to go and buy them. I own Tencent through an ETF. That's called HSBC MSCI China. So look out for that one if you're based in the UK. So the ones that I want to profile today are, and then sorry, one more honorable mention is a company called Enlabs. And Enlabs is a company that I bought and then subsequently sold when coronavirus was hitting, but it's actually one that I regret letting go of. So yeah, I wish I'd kept that stock. So yeah, it's been really interesting. Some of my stocks have gone down dramatically recently, and some of them have gone up dramatically recently. One of them that has gone up dramatically is one of these gaming stocks that I want to tell you about, and that is this one called Focus Home Interactive. Now, Focus Home Interactive is a French games publisher, and it's not really gaming is probably my favorite industry to invest in at the moment, based on the current conditions, because people are now paying more for their entertainment and they're staying at home because of lockdowns and things like that. But I can't say that gaming is sort of my most knowledgeable industry. I work in the insurance industry, so I would probably classify insurance and sort of general software as my area of expertise. So gaming is slightly outside of that. So I base my decisions more on the fundamentals of the company using this tool that I have, Simply Wall Street, than I do on my knowledge of which companies, publish which games or make which games, or, which games companies are trending at any point in time. So I base it on the fundamentals, the sort of future forecasted growth rates, the past performance, and whether the company's price is good value versus the discounted cash flow intrinsic value of the company. So this one really came to my attention for a long time. I've actually been waiting to buy Focus Home stock for a number of months, and I won't go through everything, but I will just show you this graph to begin with, which is the recent stock price, and you'll see that it's now trading at 30 euros. And I think I bought it somewhere next to this pink dot, which says updated guidance. So I actually purchased this stock at 22 euros a share. So that means it's in about 3 weeks, it's gone up 40%, which is really cool because I've only got one other stock that's gone up 40% for me, and that is Microsoft. So yeah, so it's performing really well because they just released their earnings, and as we saw with Nike last week, they released their earnings and the earnings weren't perfect, let's say. They actually made a loss in the quarter, and subsequently the stock price went down. A lot of these gaming companies seem to actually be making more money through the lockdowns, and I expect earnings to continue to increase throughout the lockdowns, and that is a pretty amazing opportunity for an investor. So I would encourage you to look at gaming as an industry. And I would specifically say that, have a look at Focus Home Interactive as well. They're available on the Euronext stock exchange in Paris. The stock price is still classified as being 10% undervalued, even at 30 euros. So that's still exciting for me. I may buy more, because I think the case for this company is actually quite compelling. You see the PEG ratio there is less than 1, and the future growth is a very healthy forecasted 18%. So anyway, look at that stock. I would highly recommend it, and it's done me wonders so far. They do. I do know something about some of their games. So they have a game called Greedfall, and they seem to be and a new one called SnowRunner. They tend to call these mid-market games rather than the AAA games that the big games publishers bring out. Again, I don't know too much about that, but I really do think they've got a niche in the market, and they have a very high return on capital employed. So I think it's over 30%. So I really think they have a bright future. So go and invest in Focus Home Interactive. The second one I want to talk about is EA. Now, so it's at the tail end of my list. So Electronic Arts is here. Electronic Arts is available on the Nasdaq, and I doubt there are many people who don't know Electronic Arts as a company. They own the license for sports games like FIFA and Madden, American football, and lots of other games like, I think, cricket, and they have a big license with Star Wars. So actually the only game that I do actually play myself is EA Galaxy of Heroes, Star Wars Galaxy of Heroes. So actually the only game that I do genuinely play is an EA game. The funny thing I've learned about EA, and there's some warnings here that earnings are forecast to decline by 30% in the next 3 years. I actually have queried that with Simply Wall Street, because I just don't understand why that would be the case when all other games companies are increasing their earnings and are benefiting from lockdown. But anyway, I bought EA stock a little while ago anyway, and I don't regret my decision. The stock, I think I bought it at 115 and it's gone up to 130, so I'm happy with that for now. And I've wanted to buy EA since I started investing. So one of the things about EA that I find really, really interesting is it has a much lower PE ratio relative to the industry. And I don't understand why. So the industry here has a PE average ratio of 28, and EA has a PE ratio, which is price to earnings, of 12. So instantly I'm drawn into that from a value investing point of view. But secondly, I've noticed something about EA, and that is they tend to release their earnings on the same day as other gaming companies, like Take-Two, for example, is another one. Take-Two make Red Dead Redemption, I think, and I think Grand Theft Auto, if my memory serves me right. They tend to release their earnings on the same day, and what I've realized is that Take-Two, usually the stock price goes up on earnings day, and EA... Oh, we're back. Okay, sorry about that. So EA's stock price goes down, and Take-Two's goes up. So I always buy the day after earnings because I get EA at a discount, and I already think EA trades at a discount because it has such a low PE ratio for a gaming company that has a very high return on capital employed. Everything is sort of digital, so they have return on capital employed 17%, return on assets of 26%, return on equity of 40%. So all of the fundamentals are there, and they are clearly a money-making organization, and they are focused on earnings. So I just recommend this company as an investment. I think EA is an overlooked gaming stock. I think, frankly, it's a bit of a bargain at a PE ratio of 13. I think it could easily be 18 or above. So I think there is room for making a profit with EA. And the last one I just want to mention is not actually a gaming company. It's just an update on what I've been buying. So the last one I want to mention is that I have bought a bit of Facebook. So Facebook has had a rough... it's just clicked on Kiwi, not sure why. Kiwi is another company that I'm going to profile in a different video, but not today. So so I've bought Facebook, and again, Facebook is another company I've wanted to buy for a while. Facebook has its fingers in a number of different pies. So it owns Instagram, it owns WhatsApp, it owns Facebook, and really even it owns other companies as well. But even in those three, it has a lot of dominance, and it has a lot of value in having basically people's personal information, it provides Facebook with its value. So that I think is very powerful. Facebook is a good investment in my opinion because most of the time it on a discounted cash flow basis it is undervalued, which is not like some of the other tech stocks which tend to be slightly overvalued. Facebook doesn't have any debt. It has a very high growth rate, about 20% annually, and is projected to grow at a similar sort of pace. Well, actually historical, it's grown at 32% a year. I mean, you don't normally see that kind of growth rate. It also has huge profit margins of 30%. But one thing I like about it is the return on capital employed is above 20%. The financial health is perfect. Short-term assets are higher than long-term liabilities and short-term liabilities, and it is debt-free. So again, I would recommend, just running through the list again, investments in Microsoft, Tencent, Sony, Enlabs, which is a gambling company based in Sweden, Focus Home Interactive, Facebook, and EA. Go and buy those stocks. I've been buying them. You should do the same. Okay, cheers guys. All the best. Enjoy the rest of the weekend.